I think it's always good to have a pessimistic view on governance because people love hating on collective decision making. It's like a very easy thing to hate on. But I think the optimistic view is that there's a lot of innovation in these types of ways. And crypto is the only place I see in the world that bothers experimenting with this. The rest of the world is instead fighting over whether Nicolas Maduro can rig the election or not. Right?
Not a dividend.
It's a tale of two clans.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate concept.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Robert, the crypto connoisseur and czar of Superstate.
GM, everybody.
And we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo, happy to be back. It's been a while.
And finally, I'm Haseeb, the head hype man at Dragonfly. So we're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. All right, so it's been a little bit. We've been kind of off and on for the last few weeks. Just, a lot of us have been quite busy. The crypto world has been equivalently busy, as has the world of politics. So let's check back in with our friends vying for the White House over in 2024. And it turns out that very recently we had a blockbuster appearance by Trump, as well as RFK, the guy who's running as an independent for the upcoming election. And everybody now seems to be making speeches about the idea of the United States buying a strategic Bitcoin reserve. So now, what is a strategic Bitcoin reserve? I don't quite know what is strategic about the strategic Bitcoin reserve, but what is contemplated, and this was given first by a speech by Trump, and then also echoed by another speech by RFK, as well as a bill that was proposed by Senator Cynthia Lummis, is the United States government basically going in and buying a bunch of Bitcoin on the open market until they have a big pile of Bitcoin. Numbers have been floated. RFK said 4 million Bitcoin out of the 21 million, which is a massive amount. Senator Lummis proposed 5% of the total Bitcoin supply. Trump, I don't know, I don't know if he said anything very specific. I think he just kind of alluded to it.
I think he just said no selling. He's like, we're not going to sell the Bitcoin that we have.
We're not going to sell the Bitcoin. Okay, so basically the Bitcoin that's on the balance sheet, it just doesn't get sold. I guess that's Bitcoin that we seized from like the Silk Road, and that becomes a strategic Bitcoin reserve.
Which is funny because this week they started moving some of the Silk Road Bitcoin to start selling it. So I don't know if it was intentional. I'm sure it was already scheduled, but funny timing.
Right. Okay. So boys, is this finally it? Have we hit the point of institutional adoption? Is this what we meant?
Yes, this is what we meant. I don't think anyone a few years ago would have envisioned a 50-50 probability based on a coin flip of an election, which is going to be a very tight election, a coin flip that the largest economy in the world would declare that Bitcoin is strategically important to the balance sheet of the largest economy on earth, and that it must respect the asset. I mean, that's like the biggest sovereign adoption that's possible. The US is without question at the top of the stack. And so, that would be the largest domino if the US actually implements such a thing. I think many other countries would follow, not in any particular order or time frame, but it would give a massive amount of legitimacy to the asset as a global asset. I don't think, Bitcoin is necessarily a strategic asset in the way that oil is a strategic asset, where it must be stockpiled so that your country can physically go to war or fuel its transportation. I see it as a financial asset, and countries do make financial investments all the time. Central banks have a diverse array of policies on what assets they put onto their balance sheet. Treasuries do as well. I mean, making financial investments is not new. Gold has always been a financial investment for economic security. So I think it's a little bit of a misnomer and weird marketing to call it like a strategic reserve. Because that makes
when do you release the strategic reserves?
Right. Correct. And so I think that's a little bit awkward. But as a Bitcoin holder, most people who are listeners are likely Bitcoin holders in some way. The idea of the US government becoming a Bitcoin holder and or purchaser is massive news.
So I agree with you in the long run, if you can get other government. So obviously if Trump is elected, he is not proposing that the US government becomes a marginal buyer of Bitcoin, but rather that it just doesn't sell the Bitcoin that it currently owns. Maybe that is the gateway drug to getting more Bitcoin at some point or diversifying into Bitcoin. But at least for the moment, it seems like markets they reacted a little bit to Trump kind of just, kind of build a little bit of red meat, but it wasn't like, oh my God, there's now a 50% chance that Bitcoin is going on the balance sheet of like every sovereign in the world. I kind of see it more as like the gateway drug thing, is that it's legitimation. At the same time, of course, many people around the world see this as like kind of ridiculous and like, okay, well, first of all, how much ability does Trump have unilaterally to create a strategic Bitcoin reserve? Like maybe if it's like, okay, can you get Treasury to like not sell their Bitcoin? I guess, Treasury's under control of the executive, but can you do anything more than that really? I just don't know. But if you look at like what Cynthia Loomis is proposing, which I believe is proposing that the Fed do this, right? To buy 4% of the Bitcoin supply, or sorry, 5% of the Bitcoin supply. That is absolutely insane, but is potentially possible if the stuff that Trump has been, or that has been leaked in the New York Times and so on about Trump considering some kind of takeover of the Fed, in principle would be possible. I think insane, and I think very unlikely that he would even do it because, whatever, he's already elected, so what does he care now? But that would be absolutely earth-shattering relative to, okay, they don't sell the Bitcoin and we call that a strategic Bitcoin reserve.
Yeah, it's also interesting because, the Strategic Petroleum Reserve was created through an act of Congress. It was, essentially US policy to stockpile oil. It's a question for the policy people who listen to this show about whether, the executive branch can just do something similar. Or, he would have to convince lawmakers to, make it a US policy to stockpile Bitcoin in some way. But, for comparison's sake, the Strategic Petroleum Reserve was created by Congress.
Yeah. I mean, it's the power of the purse is controlled by Congress, right? So they can't spend net new money to go buy stuff and just put it on the government balance sheet without Congress, pretty much for sure, right? You can maybe dig around some weird executive orders somewhere that
yes and no. Like the Federal Reserve is able to put new assets on its balance sheet without acts of Congress.
The Federal Reserve is, right, but that's not under control of the executive branch, right?
Correct.
So the executive branch explicitly controls Treasury. So Treasury, like it's not independent, right?
Although I will say, and like I'm not saying this is likely, but during COVID, when there was all the crazy like central bank buying every possible asset, there was a lot of coordination between the central bank and the executive orders to kind of do that type of stuff. So in a situation where they're both aligned, I feel like they can help each other do that. Now, of course, you need a crisis. Aligned. You need a crisis. Yeah, I feel like you need a crisis for that. But like, I think Trump doesn't let crises go to waste, it seems so far.
But what kind of crisis would make?
I mean, the pandemic was a great example. No, the pandemic.
Buying Bitcoin.
That was like, also a great time to have done that. Right?
To buy Bitcoin?
Well, I mean, if you have countries increasing their gold reserves during that time, I don't see why they would not necessarily consider it, especially if they're already have. I think it's like a 0 or 1 thing. Like once they start, they can't stop. It's like
sure,
even if they get
It just struck me as it's kind of like school elections, and one candidate promises chocolate milk from the water fountains, and the others it's free recess, and then it's just like kind of making up claims, and everyone's like trying to like out Bitcoin each other. But I think the other parts of Trump's speech were actually kind of more interesting, and it feels like somebody well informed is kind of feeding him crypto policy. I mean, you talk about like firing Gary Gensler and commuting Ross's sentence, and he said ending Operation Choke Point 2.0, which is like Nick Carter's whole thing, and so it's like very kind of crypto shibboleth-y coded, and that I think was actually more interesting to me. That it's not just I say Bitcoin and people cheer and thumbs up, and that's kind of the end of the speech, but it's like, okay, maybe there's like a little bit more nuance to kind of the crypto policy and perspective.
There's kind of a funny like I am Satoshi type of thing happening here, where like at least 3 different people have told me that they or their boss is the one who told him to fed him this, and it's like funny, like everyone wants to take credit for doing it. So like I find that also kind of this like very funny thing.
Of course they do.
Yeah.
Like, this is the transformation of, a major party candidate into being pro crypto. How could you not want to take credit for that if you were adjacent?
It's just funny because like there's this like DDoS effect where like Sybil attack where like everyone is saying I did it, right?
Totally, but it's now officially a part of the Republican Party platform to be pro crypto. So
Yeah, that has been a real transformation. So interestingly, along the same weekend, so obviously there was a Bitcoin, this gigantic Bitcoin conference in Nashville where 2 presidential candidates attended. There was supposed to be a third, which was Kamala Harris. So Kamala Harris, of course, is now the presumptive Democratic nominee, and Kamala Harris supposedly was in talks with the Bitcoin conference organizers to also appear at the Bitcoin conference, but ended up deciding against ultimately attending. But so it sounded like, from the noises that I'm hearing from some of the folks who are, kind of more politically active in the US, that the Kamala team is interested in crypto. They're trying to wrap their head around it. They're trying to get more input from the industry to say, hey, what's going on here? This seems really important. And it seems like so far our policy stance has maybe been not constructive. We want to hear from you guys, and we want to get an idea of what we can be doing differently. But it sounds like they're still undecided. But they're open to conversation, and they're willing to take meetings in a way that the Biden administration was just really not open to. So that also seems good, that both parties seem to be moving towards something closer to the middle ground. But Republicans clearly have fully embraced the crypto platform at this point.
It pains me to say this as someone who's born in Delaware and hates California. But I would obviously think that California Democrat is much more crypto than someone from Delaware, and me and Ansem might be the most crypto people from Delaware possible. Everyone else is not going to make it.
Fair enough.
I don't even know anyone else from Delaware, so you automatically win.
Yeah, I mean, yeah. The only first person I ever met in crypto was from Delaware is Ansem. So I will say it's like,
wow. I didn't know they allowed non-white people in Delaware. That's very interesting.
That's funny you say that, because the third most popular religion in Delaware, or most common religion, is Hinduism. It's like, yeah, they're all going for the saving tax money.
I just remember. Do you all remember Wayne's World, the original, where they have a fake backdrop and they're like pretending to visit different states, and they visit Delaware and they go like, Delaware. Okay, not sure what we're doing here. All right, next state, one thing for each state,
Yeah, they incorporate in Delaware and they move on to the next state.
Delaware also has a great slight tangent scam in that it has one of the shortest amounts of federal interstate highway, but it has the highest toll to number of miles you drive ratio. It's only like 15 or 20 miles, but the toll is like $6. Like, not counting
there you
a bridge.
Go. That's thank you, Tarun, for the Delaware trivia that keeps all our viewers tuned in.
There should be a recurring segment, I think.
Yes,
Delaware facts with Tarun.
We would run out very quickly. It's like it's kind of a shit state. It's kind of a shit state.
Okay, all right. Well, hold on. We're gonna lose all our Delaware viewers, Tarun. You got to slow down.
Yeah.
Okay. All right. So let's move on. So very interesting week this week in on-chain governance, and this is one that I think is it's got a few sort of twists and turns in the story. So let me set this up. So Compound, of course, governance protocol. Some of the people on the show may have some prior affiliation with Compound. So Compound is a lending protocol. It exists on chain. It's fully decentralized. So it is governed purely through on-chain votes of people who own the comp token. So there is a gentleman by the name of Humpy, who turned out over the previous weekend, voted on a proposal that was going to allocate 500,000 comp, which is worth at that time about $25 million, from the protocol treasury to a new yield-bearing protocol that was designed by this group called the Golden Boys. And this group, the Golden Boys, was going to establish this wrapped comp token called Gold Comp, which would do some kind of mining yield thing. Don't quite totally understand what the idea was. And so originally they made this proposal with I think 100,000 comp, and it was defeated in governance. And then they came back a few weeks later and then made another proposal in which they 5x'd the amount of comp that they were requesting. And this proposal, I guess it went to a vote over the weekend, and people in governance just kind of didn't see it or didn't get around to voting on it, or the alarm didn't get raised. And this proposal passed. And this proposal passed in large part due to a large amount of comp that was purchased on the open market, presumably by Humpy, in between the time of the first proposal and the second proposal. Now, this guy Humpy this is not his first rodeo. Okay, so Humpy has a history of going after DAO governance and pushing them as a quote unquote activist investor for his own or his or their personal gain. First was Balancer in 2022, where Humpy cornered like the cream WETH pool and then used his BAL tokens to get a bunch of emissions to the cream WETH pool, and then fought with, there was like a detente at some point, and it was like a whole thing. And then did the same thing most recently with SushiSwap in 2024. And so he's basically like a kind of known actor in activist governance stuff. So there was a bunch of people on Twitter being like, "Oh my God, how could this happen?" There was this kind of thing that just went on and nobody paid attention, and now all this comp is owned by the Golden Boys. Well, so in the end, there was some kind of let's say midnight negotiating with Humpy and broad community backlash. And they decided instead to withdraw the proposal, which had already passed governance. The proposal was withdrawn and canceled and replaced by a new proposal, which is basically everybody's happy now. We're doing some kind of compound staking, and 30% of token reserves go to stake compound holders. So basically, no now weird thing, and no more Golden Boys involved in this. And everybody kind of counts it as a win. So it seems like all is well. Whatever bad thing people thought was going to happen has not happened. But it's caused a lot of consternation and a lot of discussion about, one, the role of activist investors in DAOs, two, the role of active governance and whether this is an indictment against DAOs or whether, there's something wrong with DAO governance such that something like this could happen in an OG DAO such as Compound, and what it means for thinking about DAO governance going forward. So let's go around the horn and take people's perspectives on this whole Compound governance Humpy episode. Robert, why don't you kick it off?
I'll kick it off. In full disclosure, I've been quite removed from the project for over a year. So most of my views are just as an outsider, but as also someone that was, involved early on in helping to design the governance system that has become one of the standards. So, as background for folks, the Compound governance contracts and frameworks are the most widely used in crypto today. They're, copy pasted repeatedly. Open Zeppelin has standardized them, and it's basically a library that, a huge number of projects are using for on-chain governance. And this is done because the contracts are relatively simple, easy to understand, easy to reason through, and they don't have like complex parameters. It really comes down to, one token can be delegated. Whoever, is entrusted to vote that token, it's one vote, one token. So it's a very simple system that's easy to understand. And when it was designed originally, it was done not knowing what to expect, because, governance on chain circa 2020 was incredibly new. There was very few working examples at that time to use as prior art. Since early 2020, there's been, in a lot of ways, huge advances. It's been 4.5 years since the system was designed in on-chain governance. And so, my first thought is, this is one of the oldest on-chain governance systems that exist. Like, so many improvements have been designed in the year since. This was almost like chapter 1 or chapter, 1.5 of on-chain governance systems. One token.
What do you think has gotten better in on-chain governance since like the Compound Bravo days?
Yeah, there's a few things. One is, I like some of the models out there that have time-based voting. I actually like Curve's governance contracts in a lot of ways. I like that the longer you commit to being a stakeholder, the more your vote counts, so to speak. I think that actually prevents, certain types of negative behavior. I like systems that do have some like external safeguards in place. The Compound governance system has very few like checks and balances and intermediaries. It was designed that way, deliberately, but there's very few things that allow people to cancel proposals. back when these were first created, the idea that like, a multi-sig was going to have to approve each, governance proposal seemed crazy. Now it's almost the norm where it's like, oh, a trusted counsel, you know, can prevent bad actors from being involved in the protocol. Well, at the time, from the crypto, philosophy, that was considered absurd, right? And so there's very few safeguards or very few checks and balances that are in place that allow a council or whatever to cancel proposals or screen them or censor them. It's really a censorship, you know, censorship not allowing process for the creation of proposals. And so, this was always a theoretical possibility that somebody would just become an extremely large stakeholder and, push through their will, right? It's hard to say, in this particular situation, like, is the system working? Is it not working? I don't know. I mean, this is one of the most widely debated things on crypto Twitter. But, it's interesting that someone was able to accumulate just like so much of a governance vote very quietly and very discreetly. And really putting a major system like this to its test in one of the, for the first time in a lot of ways.
So Tarun, I know Gauntlet has been very deeply involved in compound governance, and you guys were also a participant in the, or not I don't know exactly what the role was of Gauntlet, but Gauntlet was like sort of in the governance forums advocating for the eventual resolution that Humpy or Humpy's emissaries proposed to bring the whole thing to a rest with this new staking proposal. So I'm sure there are things you can't say, whatever, but like, give us, what is your take on this whole drama and how did you guys view it?
So I would say this wasn't a thing out of nowhere. There had been 2 prior attempts. I think in all these attempts, we had spent a lot of time trying to explain to voters, what this proposal was trying to do and claim to do, and try to encourage people to participate. I think we were able in the first vote to corral sufficient support. I think there's sort of a combination of factors that led to the second one. First, obviously, the increase in size certainly helped. Second, a lot of the largest holders are still US funds, and US funds are extremely afraid due to some regulatory actions that have taken place against DAOs to vote in DAO governance votes. And so, I think you're in this very weird predicament where, hey, to reach quorum, it's extremely hard to do it without one of the US funds who owns X percent and, sufficient to have the vote go through, who doesn't really want to take over, but they're afraid of their own liability. And so they won't vote. And so then it becomes kind of corralling work of trying to get the group of active participants, as a kind of this, maybe not disclaimer or disclosure, but just like, we've made like the most proposals in the last few years, like, and we're making proposals like weekly or every other week. So I think we are quite deep in the weeds there. And I think we've definitely observed this chilling effect from each of the actions against DAOs where like funds slowly stop voting. And I think if funds own a large percentage of the float, but then don't vote, it actually makes them susceptible to this. So there's, I can understand the funds perspective. There's a kind of, unbounded legal liability thing in participating. On the other hand, if an attack is successful and, there's funds lost by users in some indirect way, then the funds are also probably liable to other types of lawsuits. So it's kind of a weird situation, and I would partially blame the regulatory uncertainty for US entities. So DAOs that have a lot of US participants are very different than DAOs that don't have many US participants.
So what you're saying, it's all Gensler's fault, no matter what happens.
I think it's partially Gensler's fault. I also think it's the fact that these funds own these stakes and, haven't quite figured out the correct way to participate in these networks. Whereas like, much more foreign participant DAOs have much higher participation rates. So I would say that. I'd say the second thing is, and this is something we spent a lot of time trying to advocate for, but sometimes it's a little bit hard in DAO governance, which is if a DAO is earning a lot of fees or has a lot of accrued fees, I think those fees should be either delivered to the suppliers, the participants in the protocol, or they should be used as insurance or something, but they shouldn't just kind of collect and not get used in some way, right? And I think in this case, there were quite a large amount of accrued fees, which made it a sort of natural reason for someone to want to do this. Now, other lending protocols, other perpetual protocols have added fee switches. And again, this gets back to this US entity thing where, like, if you look at the Uniswap fee switch thing, it was large US funds who sort of blocked the vote, even though like most of the community was very pro turning on the fee switch. So there's some combination of large US funds and Gensler, who I think are in a lot of ways the culprits of this. I do think there is value, though, that in, again, like people bringing this type of stuff to attention. I think it's just sometimes would have been done a little more carefully or gingerly. But, it's crypto. So I think you're always dealing with cowboys.
Tom, what's your take?
Yeah, I mean, I think it's this classic, like, people want to have their cake and eat it too, where they, don't like the dead weight on in governance of these large funds who might not want to vote for various reasons. But then, obviously they also don't like the idea that, hey, one large actor can basically, dictate, the direction of the protocol. And so it's sort of like, you close one eye and you see Humpy, and you close the other eye and you see like Andreessen. And, in some ways it's like, that is the nature of on-chain, asset weighted voting. And there's ways, as Robert was saying, to, deter or mitigate bad actors, but it is ultimately like kind of, it comes with the territory. I think kind of the workaround obviously has been more delegation to university blockchain clubs, university or delegation to paid delegates. And I don't quite know kind of how that system is working. Obviously, in some ecosystems and some DAOs, they're very vibrant and there's always new proposals and there's good treasury management. And then in others, it just feels like, everyone is asleep at the wheel. And, this is sort of a very egregious example of somebody who, maybe didn't have the best intentions, kind of trying to, pilfer the DAO for its riches. But I think there's minor examples. People have, talked about, hey, like, this is a ridiculous budget for this particular item, or, some contractor is billing the DAO, hundreds or thousands or millions of dollars for very simple work. And I think that stuff probably goes on more frequently, but doesn't get the attention that, someone like Humpy does.
Well, I think yeah. I think at the end of the day, DAOs that earn fees that don't redistribute the fees to different stakeholders will always be kind of face this type of dilemma. I think if I look at something like Rook DAO, where there was a real hostile takeover, that was much crazier. I think it's just that this, because it was kind of is much more well known, was kind of in this vein. But
so it seems like the views here are between sort of Robert kind of pointing out, okay, governance has grown up, and this is kind of a very this is sort of a more primitive governance system that could probably improve some mechanism improvements. Tarun, I think, kind of saying like, well, if you keep a bunch of assets on the balance sheet, you're a honeypot, you're going to attract this kind of behavior. That's no good. People should pay more attention. And Tom just saying like, well, whatever, it's Wild West. Like, what do you expect?
I also do place some of the blame on the U.S. funds, right? Like,
yes. And I think that is definitely absolutely right. And, full disclosure, Dragonfly is an investor in Comp, and we own some Comp. We did not vote in that vote. We didn't know the vote was going on. There was a weekend, which is obviously a lame excuse, but is true. But also, to your point, Tarun, we try not to vote directly on things because of the exact same reason that you mentioned, which is that, there's been case law within the US that claims that when, funds participate in DAOs, so you remember very famously the Uki DAO case, in which a judge, so actually this is not actually Gensler, this is like some district judge, who said that if you voted your tokens, you are, basically liable for the actions of the DAO. And what effectively that says, I mean, maybe there's some rationale to that theory. But of course, what it incentivizes is don't vote if you don't want liability. And that has created this really messed up equilibrium where the overwhelming incentive for investors, whether they're retail investors or institutional investors, is don't vote your tokens if you don't want to take on liability for what happens afterwards. And of course, nobody wants liability for what happens afterwards when some crazy guy creates a vote about gold coin, golden boys, whatever the hell is going on. The interesting thing I think is fewfold. Now I should also note that we're very small investors in comp, right? So we're not even in like the top 20 owners of comp. So relative to some of the other funds that people were yelling at, I think we're pretty de minimis relative to those guys. But the general point I think is correct, and I don't know what is a good answer to that besides just more delegation and paying delegates, right? I think the answer is that you need to make sure that there's a healthy ecosystem of delegates that big players like ourselves or other investors can delegate to, and that they're compensated for doing good work. And I think also to Robert's point, this is nowadays a best practice to have some kind of council of trusted community members that can't just wholesale do things, but can at least veto bad actions, right? The reality is that in corporate law, and we sometimes analogize DAOs to corporations in a kind of loose way, in corporate law, you cannot just pass anything that you want that goes through a shareholder vote, right? There are certain things that are not allowed, such as something that, for example, benefits certain people in a class of shareholders over others. You're not allowed to do that. You can't say, we are the preferred shareholders and the common stock shareholders don't own as much, so we're going to vote the preferred shareholders to get a giant dividend that the common doesn't get, right? Can't do that because obviously that would incentivize essentially a kind of corporate raiding or stripping or tunneling, which is basically, you buy a company and you strip out the assets and sell it or give it to certain people over others, right? If you do that, that basically is an incentive to just go, as Tom said, just raid the piggy bank. But DAOs don't have this mechanism by default. There is no way programmatically to say, this is unfair to a certain class of token holders, such as this proposal for the Golden Boys. It's actually pretty unclear what the Golden Boys were going to do once they had this gold comp thing, right? They sort of claimed, and ostensibly in the governance forum, they were like, no, we have really genuine reasons to believe that what we're doing is for the good of the protocol. And for all I know, maybe they did have genuinely honest incentives that maybe just looked kind of weird on paper, but maybe they were really trying to do the right thing and they're just weirdos. At the end of the day, the cleanest way to avoid that is to just say, look, whatever it is you're proposing has to be able to get by a council. And that council is, it's not unilaterally competent, but it can at least say in the worst case, hey, your job is to stop weird stuff from happening. In the worst case that somebody does end up getting this 51% of governance votes. And it ultimately acts mostly as a disincentive to even try, right? It's not that there's a bunch of proposals going through any of these DAOs of people trying to, vote themselves all the money in the DAO, but just in case it does.
That has happened though.
Beanstalk. Right, but it's very rare, right? My point is that that's very rare.
There's also cases where take all the money has happened, like Beanstalk was one of the examples. Where, there was a voting contract and somebody won a vote and took all of the assets backing the Beanstalk or whatever. Yeah. So to be clear, obviously that has happened before, but these things are rare. If you have this kind of veto mechanism, it basically becomes just not even worth trying, So it does feel like it's a teachable moment for DeFi and for governance generally. I don't know if it I think there's been a lot of sentiment lately of hey, DAO governance kind of sucks. And maybe we should just move away. We should just move to these governance light systems or just embrace the multi-sig, and just say fuck it. Right. If it's going to be multi-sigs, just make multi-sigs all the way down. I don't know. Tarun, what's your view on the people who are sort of anti-DAO governance?
I mean, I think DAOs can work if they have active. In general, I think it's active teams and founding teams. It seems quite crucial to their success. Just mainly because it's the vote distribution is not. It's hard to take pure community members and get the vote distribution to be real, sufficient for such a DAO. I think there's some version of the world. I think in Solana, there's a lot of examples of people trying to do more wilder governance mechanisms. Actually, I think I would actually put Solana as much further out. I saw a lot of people talking about how dual token voting will solve everything, and I don't know about that. We've seen just as many problems with the dual token votes, and like that to me is like
What
wild
problems
to
have
say
we
that.
seen with dual token votes? You're talking about
Well,
like OP or Lido?
yeah, no, Lido is actually fine. It's just OP. I mean, I think the way the like grant distribution worked and stuff was like quite unfavorable. There's they have like an anti they had some sort of, I would say, liability issue, the type of stuff Tom was talking about, where like people found ways to abuse the system and get paid a lot. It's sort of like a very it actually makes the dual token thing, I think, actually makes it more opaque as to when such a thing is happening versus the single token. So I'm not sold on that. I think the Solana experiments are far more interesting, to be totally honest, because people are trying futarchy again there in governance. People are trying a
Wait,
lot
what?
of
Who's trying
different
futarchy?
drift. Drift governance is going to be
Drift is
futarchy.
doing futarchy
Yeah,
on governance?
yeah.
Wait, didn't they just launch the prediction markets like a week ago?
Yeah, but they're dog fooding their own protocol. I'm telling you, like I think people in Ethereum land don't spend enough time looking at Solana stuff, because I think it's actually worth looking at, because it is a huge community of people. It's like definitely the second biggest by number of
Sure.
people, and they are doing interesting things there too. I think like their governance contracts look very different. Their multi-sig and governance are more integrated. I think, like, if I look at Nosa Safe, it's sort of more isolated from, say, something like Compound Governance to Aragon, and you have to like glue them together in the right way. The way the Solana code looks is quite a bit more integrated. So I guess my long story short is, like, I think people in Ethereum on L2s have been taking more aggressive steps than applications on governance, and I think we'll see if the fruits of that, hopefully. But I think there are people still doing experiments. I don't think there's reason to be totally negative. It just feels like, it's like saying I hate politics because like everything sucks, but then what's the next best alternative? It's like equally bad, right? So I think if you take a slightly more optimistic view, there are people still innovating in governance. They're just not where you think they are, and I think it's really worth making sure those experiments happen.
So, Robert, let's say a founder comes to you, they're building a brand new DeFi protocol, and they say, okay, what is the best practice today on governance? What should I be doing and when should I be doing it?
Yeah, I mean, at a really high level, in general, my view is, there should only be governance in place once a system is relatively hardened on its own and doesn't need constant governance, right? Because, the ability of pre-governance to make changes, to edit, to update, to, modify, to tweak is vastly superior to that of a decentralized community. Right now, like, you probably cannot find an example of a decentralized community that's like quick and efficient and effective at decision making, right? Like, it's very and so governance is almost an end of a process, not the beginning, right? And I think like one of the biggest mistakes I see is like people start off and they're like, day zero, there's governance, sometimes even before there's a protocol, right? It's like people are putting governance way too early in a process, not where I believe it belongs, which is at the end. And so I think that's the first like major mistake. The second, I do think that, so much has changed over the last 4 years with governance. I think a lot of the, you know, philosophical perspectives that people have evolved. I think at this point, good governance is, limited in how much you want or should have a very broad community making decisions. I think it's great for certain decisions, ratifying something new, deciding, A versus B. Like a crowd is very good at that. A very large dispersed community like is not efficient at, modifying the risk parameters of a protocol. They're not efficient at, calibrating, a lever, right? And so, I think at this point, protocol should be designed, and this is both governance light and governance complex, but to have specialists in place. It's like, okay, this specific team, whether it's a multi-sig or some custody address or whatever, has powers to change X. This other thing has powers to change Y. This other thing has powers to change Z. And not, okay, it's a broad community that does everything at all times for all the citizens. Like, that's incredibly inefficient. It's almost like, committeeification of control. And I think there's a lot of ways to do that natively in protocols, right? Like, the only times you need like very broad token holder governance is for major decisions.
And I will say there is a move in newer DeFi protocols in Ethereum and a little bit in Solana, but I think this is more of an Ethereum thing, to having these kind of like layered protocols where each layer is sort of governed differently, and some layers will be governed by a smaller group or even one person. Some layers are governed by the overall DAO, like things like Morpho, Mellow, etc. And then they have, competition between the different layers, or like you might have multiple participants who offer a different service at each layer. And I think we're going to start seeing innovation of that form, which is more like, I think DAO governance in 2020 was like, here is an arbitrary function that you can execute on the state owned by the governance contract, and people vote on it, right? And now it's much more like, here's access controls, here's certain types of users, certain types of groups. And I think in 2021, in the euphoria, there are a lot of people who are trying to build tools for DAOs around this kind of very basic primitive of like, we have a function that can be executed on the DAO's state, and people vote on whether that function gets executed or not. And I think the tooling was sort of you're kind of in a rock and a hard place, because it's like, it's very hard to build that off such a basic primitive. Whereas what we're seeing now of like these like layers, each having a more well-defined scope of what types of functions can be executed, when can they be executed, what level of granularity do you need. Those are actually providing a lot more efficiency. And so I think I think it's always good to have a pessimistic view on governance, because people love hating on collective decision making. It's like a very easy thing to hate on. But I think the optimistic view is that there's a lot of innovation in these types of ways. And crypto is the only place I see in the world that bothers experimenting with this. The rest of the world is instead fighting over whether Nicolas Maduro can rig the election or not, right?
Well, I love seeing these examples of convergent evolution. And I feel like in DAOs, I was reading a little bit about the history of the SEC and the independent agencies that arose in the US. And these agencies, like these independent agencies, were part of the reason why they're independent. It means that they're not under the executive branch formally. The president can't fire the head of the SEC per se, unless it's for cause, like they have to have done something wrong. A big part of the reason for that is that they were originally understood to be delegations by Congress, right? The idea is that, okay, Congress/Parliament, it's kind of too hard for a big, group of like 200 people to agree on, complex questions. They can't decide on every little thing. And so they're supposed to delegate the authority to like a smaller group of people who are outside the remit of the executive branch, but have almost like executive-like authority to make rules. And that's supposed to be what the SEC is doing, is making rules, which is obviously what one of the things we're complaining about is they're not making rules about crypto. But that concept feels very similar in a way to what we're now arriving at for DAOs. Like, don't have every little decision go through all of Congress, right? That's crazy. That's like a massively terrible way to make decisions, is like a gigantic Ouija board that we're all, pulling around collectively on every little decision. We need some degree of delegation, some degree of specialization, some degree of like, let there be grandstanding and, big arguments over big political questions of the day that really do require group input. But otherwise, like, let's agree to specialize and delegate effectively.
Yeah, but at the end of the day, I still think there's just a lot more transparency in what is happening, even when you have the specialization, which I think is the clear difference between this. And I think people just don't like, especially people who are like pure traders within crypto and like, or pure like only think of the financial aspects of these and not how the code looks and like what actually goes on under the covers. They have a kind of like, hey, like everything should be as fast as me being able to make a DEX trade, right? And like that's just not the way software development works. Like no matter how you cut it.
Fair enough. Okay, well,
And it's also like crypto is filled with a lot of like angsty 20-year-olds who like I feel like have never had interpersonal conflict in their life, and then turn out to have very crazy interpersonal conflict, in their first ever encounter with it.
There's also 15-year-olds
Damn,
and 85-year-olds,
Yeah.
Yeah.
right.
Yeah.
And both sides. Sorry, I shouldn't just discriminate against you. It's just there's no 85-year-old crypto users as far as I know.
I think there's some for sure.
I'm sure they're out there.
Yeah,
It's hard to imagine
Trump
Biden.
is 79
It's hard to
and he has an
imagine
NFT
Biden
collection.
even being able to like, when you buy a hardware wallet and they make you retype your
Click,
seed phrase, like he's gone. Like
You
there's
know
no
what?
fucking
That is
way he
not
does that.
accessibility friendly. I will. Yeah, that is true.
It is like there's no way. That's what I'm saying. I feel like if 85.
Dude, I can barely do those. I'm sure. Yeah, anybody who's in their 80s.
When I mean real on chain, like you're self custodying, whatever. Okay, fine, you're doing it through Coinbase. There's 85-year-olds, I'm sure.
Yeah. Okay. All right. Well, let's switch gears a little bit. There's one more story that I want to get to that's a little bit more somber. So there was a story that broke today that the SEC as well as the DOJ unveiled complaints against the founder of BitClout, Nader Al-Naji. So BitClout. I should caveat that Nader, I think, is somebody who I'm pretty sure all four of us know Nader, and I've known Nader for many, many years. We were not investors in BitClout, but we were investors into Basis, which was the previous project that he ran that he shut down in 2018. So this is many, many, many years ago. So Nader, he is the founder. He was originally the founder of Basis, which was the original implementation of Señorita Shares, which was a stable coin that's kind of Luna-like. I mean, Luna is not really a perfect analogy for it, but it was sort of loosely adjacent to Luna. Yeah, it was Luna-like. Never ended up launching because they thought that regulatorily it couldn't make it, but they raised over 130 million for that token, but then gave all the money back. Then Nader emerged many years later to build something called BitClout, which you can think of roughly as a predecessor to FriendTech. So it was a social-fi app, one of the first really big social-fi apps. They raised something like 40 million, 30 million from A16Z, Sequoia, a number of other funds that invested. And they basically allowed you to speculate on the demand for a social token corresponding to somebody on Twitter. So you could buy an Elon token, you could buy a Hester Purse token, as we later learned. That apparently pissed some people off. And so made a lot of people mad in the way that they went about what they were doing with BitClout. But the charges that have now been filed against Nader were for a couple things specifically that they did. So first of all, Nader, through BitClout, which later rebranded to DeSo. So if you don't know the name BitClout, you might know the name DeSo. They were charged with having raised $257 million, which they claimed was purely going to be held on chain. So there was basically like a bonding curve where you could buy BitClout on chain using Bitcoin. And the wallet that you were sending this into was supposedly a decentralized wallet owned by the network DAO, something. This turned out not to be true. It was actually Nader who had unilateral control over this wallet. And he was taking money out of this wallet in contravention to what he was telling to investors as well as to the investing public, that he was taking this money and spending it on influencers, personal expenses. He gave some money to his family. He apparently rented a mansion in Beverly Hills, as well as using it to just pay developers and do kind of normal kind of things that one does when one launches a crypto project. And so he apparently all sorts of stuff that they found in messages that he said to investors, basically denying that he was doing this. And then, when they went through all the money, they found out, yes, in fact, he was doing this. He was just arrested yesterday in California, and these charges were unveiled today. So curious to get responses from people, because I think this is one that, although I'm not close with Nader, he literally I think I met him the very first year that I came into crypto, and he's sort of been in circles that I think many of us know very well, being in part of the New York crypto scene, New York and then LA crypto scene. So curious to get responses to this. Tarun, I know that you know Nader very well. What's your take on seeing this play
I
out?
guess I met him in 2013 because I was
2013. Oh, the
yeah, I
D
was work
Shaw.
at D Shaw, yeah. And although he was only there for a month and then he like left, so I was never really sure what happened. But
Hmm.
yeah, he went to this math and science high school that a lot of people I knew went to, and I think he's one of the few people I met at that time who was a good developer, but also just like a good showman, salesman, and so it's kind of natural he ended up uh, in this vein. I think he obviously was very aggressive with how the protocol was launched. I think a lot of people were sort of unhappy about the like their Twitter likeness was automatically copied and stuff. Um, I think the allegations in the uh, filing by the DOJ and SEC seem very different than what I had portrayed it. I realized, and I think he must have pitched all of us on investing, and no one here invested.
Yeah, that's right.
Despite knowing him and whatever, something was very weird about the pitch. Also, it was very like aggressive. It was like
Very aggressive.
Get
closing
in
tomorrow, or
now.
whatever. Yeah, yeah. But I think yeah, the action, the like raising money then sending money to his family members is kind of the more egregious, surprising thing, I guess. I also didn't realize they raised that much money. The other weird thing is a lot of that money was just held in like a Bitcoin wallet that probably was controlled by one person, because it was like a maybe I actually forget if it was a multi-sig or whether it was even just like a single address. Never really understood why it needed its own chain, because it was in some ways, but yeah, people do things you don't expect from the outside. That's like kind of that's my takeaway after 8
Yeah.
hours of thinking about after reading the DOJ filing.
Yeah, I read through everything this morning, and like I think the first crypto event I ever went to, like the first real crypto event, was this IC3 boot camp in Cornell, and that was where I first met Nader. That was right after he just published the Basecoin white paper, and I remember he just raised the seed round from Naval and a bunch of other folks, and that was when I first met him, and he seemed like an impressive guy and obviously very smart. And I remember he was trying to hire me to join Basecoin. And he was like always, he's very aggressive. He's kind of a very charismatic guy. And I didn't want to join in. My buddy Ivan at the time, he also was being very aggressively recruited to join Basecoin, and he's very close friends with Nader. And I at that time, like I was just very convinced that Basecoin didn't work, right? That the mechanism was broken and that this thing would eventually break. And little did I know that would end up mattering a lot more many years down the road. But I, he was always kind of in the loop. He was sort of in these circles of people who are just kind of early in crypto and very, very, I don't know, connected Silicon Valley types. And, again, like he obviously has not, these are the allegations made by the DOJ and by the SEC. He has not obviously had the opportunity to make his counter allegations, but these allegations also seem pretty strong. And they also, these were also things that I was kind of hearing privately, that some of the investors who were in BitClout were very unhappy with the way that he was treating the reserves or the money that was raised. And it was also very clear, like what he was doing looked basically like an ICO, which I think at this point everybody knows is incredibly illegal, to just raise money from retail and say like, well, buy the BitClout token and, I'm this pseudonymous person. Like that was very clearly at the very best playing extremely fast and loose with how these things are understood to be done. So I don't know. On some level, it kind of doesn't surprise me that we got here. I'm kind of like, okay, this guy is kind of cutting way too many corners for this not to catch up with him, especially with how many people were initially pissed off by BitClout. And then you do this like ICO like thing. And then like I hear the money is not like being used in a way that is totally in line with what he said he was going to do. But it's just really sad to see shit like this, right? Because I mean, Nader, by all indications, extremely smart, very talented guy. So it's kind of like, why would you fucking do this? It's so stupid.
The one thing I'll say is I actually thought the way he handled Basis was quite ethical. And I say that as a total outsider who wasn't involved in the
100%
of it, in the closing of it. But I actually thought it was remarkable at the time. It's one of those like things that left an impression on me as an entrepreneur, is that he raised one of the largest sums of money in crypto history for a project, realized it wouldn't work, and then returned all of the capital to investors. Most people would not do that. Most people, would pivot, find something else to do with it, throw crazy parties for 100 years, whatever, right? And so it always sat with me that he, as I think the first startup of his career, raised such a monster amount of capital and then returned it. Burned through 1 or 2% of it, whatever. People got 98% of the money back or whatever it was. I always thought that was remarkable. And so, I, passed on what's now Deso, BitClout, whatever. But I didn't think that, a project would go off the rails or would wind up in that direction that BitClout did. After watching how he handled Basis, because I thought Basis was actually handled very well. It was extremely respectable, in my opinion, how it was handled. And so, I was taking a little bit of back, in the early days of BitClout, when it was the things the crypto founder finds unnerving are different for everyone. But for me, it was how they were managing private key security to interact with this blockchain.
I think the text-based private key stuff was a little bit weird, right?
It was horrifying to me as a founder, where the way you interacted with BitClout was the most haphazard approach to asset security and fund security on behalf of pretty retail users, which was we click here with your Google, we make a text-based password for you and upload it to your Google. It was horrifying. And I was oh my God, the biggest corners have been cut in ways that no crypto founder should be cutting corners. A crypto founder should not be jeopardizing user assets so brazenly, so early on. And, I think he learned from it. The response and the feedback was pretty quick. And I think at some point they changed, the security mechanisms. But, that was the second thing, as an outsider that stuck out to me.
Yeah, I think as Robert was saying, I think anyone, or maybe all of us that looked at DeSo, there were so many, yellow flags that just seemed very sus. Even this, bonding curve thing that they used to sell the tokens, there's no accreditation checks, so just you chuck Bitcoin, and the nodes for the network were closed source for the longest time, and it was why is it this thing? And even the platform itself, as you mentioned, got in trouble for having basically a token issuance platform using celebrities' likenesses without them opting. So I feel there are so many things about this that just took these flags, but weirdly most of those were not the basis of the complaint. They were mentioned, but they were more sort of as subheaders. Really, it was about this sort of misrepresentation to investors and misappropriation of funds, and that is, it's sort of those don't break the law while you're breaking the law kind of things. And so I think you could duke it out in court if DeSo was sufficiently decentralized, or if hey, you are able to sell Elon Musk coin if you're not the one issuing it, but the other stuff, it's it's obviously you can't do that. It was a bit surprising to see everything in the charts today.
Yeah, I mean, look, every startup, it's hard to get everything right, and naturally as a startup, you have few resources and you just got to kind of make a run at it and do your best. And people will usually assume good faith, but if you're fucking with money, there is just so razor thin a margin of error. And if you are appropriating money that is not supposed to be yours and you're spending it on stuff, that shit will come back at you. So it doesn't matter if you're a startup or a $1 billion company, just don't even think about doing anything like that, no matter what size you are, no matter what industry you're in. So crypto is no exception to that. And, at the time I was genuinely surprised. I mean, it's been 4 years or something since BitClout launched. So it took a while for this to eventually come back around. But it did. And eventually, I guess they cleared the backlog of cases and they're man, we're we're going to deal
From
with this.
from reading both cases, do you think it was like an investor who was pushing kind of, clearly
It
the
seems
DOJ
like
case
it.
cited, it's kind
Yeah,
of
they
cited
cite
investor, one.
one. Yeah.
Yeah.
Yeah. So somebody who invested 3 million. So if anybody wants to work backwards from that cap table and figure out who's the snitch,
Yeah.
I've never seen the cap table, but
Yeah.
no idea. It also could not be investor one. It could just be that they subpoenaed investor one, right? So we don't actually know. What's pretty clear is that they subpoenaed the records of Nader, and they have like almost everything. I mean, you just see all the messages. So they seem to have done a very, very good job reconstructing the timeline. So if you're a token founder and this is scaring you, good. Like this, if you're fucking with other people's money, that is scary shit, and you should take it very, very seriously. And to underscore this as much as we possibly can, absolutely no room for anything like that in this industry or in any industry. So, well, we'll see where this ends up. But for now, obviously, we will be waiting to see how this and the many other cases that are working their way to the courts play out. So I guess that's a wrap on a somewhat somber note. Until next time, see you, everybody.
Ciao.
ciao.